Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, September the 14th, 2012, and we're going to be looking at all the global markets that I actually analyze at PerfectStockAlert.com. They're there for you guys to review whenever you'd like. But this is Friday's video, and then typically on Friday I go over every single market that I track for you guys so that you guys know everything that I know moving into the week ahead. It also means, I'm not going to lie to you, it's going to be a long video, but it's a good one, so watch it and pay attention. Alright, okay, check this out. Looking at the Dow Jones Industrial Average, before I get into any of the other charts, I want to look at the long-term chart here because I'm hearing a lot of people talk about overbought. I already talked about this, I think it was like a week ago or maybe even two. I told you in this scenario, what's going on is you're going to get into the overbought condition like you see here in the Ultimate Oscillator. When the Ultimate Oscillator runs above the 70 line, you do get into the overbought condition. You start looking for a pullback, right? Okay, that's what typically happens. That's what I typically tell you. Blah, 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 blah. This time, I'm telling you, don't do that. Like I said, I've been seeing a lot of people talk about, well, we're getting overbought. A lot of stocks are running up to their all-time highs and so forth and so on. This time, I want you to think of it a little bit differently. Here's a move that you had on the Dow Jones Industrial Average. Of course, this is a long-term chart. Each one of these candlesticks represents a single month of trading activity. This current candlestick is not even finished. It's only the middle of the month here, and this is several years of data here. Now, you run up here to the resistance point, previous resistance point as well, sold off from that, found support, the 50-day, 50-period moving average, advanced again to that resistance point, and again back down below it. So what we have here is resistance, and now a major breakout. The idea that you're overbought and then therefore you're going to sell off doesn't make a lot of sense in this scenario because you have nowhere to go. This resistance is now acting as support. So where would you go? Nowhere. You'd go up. So even though you overbought on the Ultimate Oscillator and probably several other indicators you may be looking at out there, don't be fooled by that. There's a duality with this indicator, the Ultimate Oscillator, any of your oscillators, including the RSI, the slow stotch, full stotch, so forth and so on. And we talk about them on our videos, on our tutorial videos that tell you there are certain cases, and they're always breakout cases, where you will get overbought and hold it and just hug up that one. And it's actually a sign of strength, not a sign of weakness in that situation. So this is something I want you to pay attention to right now. You're going to be seeing what looks like overbought conditions, but they're not really overbought. Now, people are going to pull up a whole bunch of information and tell you, well, yeah, but if we look back at the past times when this happened, the past times didn't have the Fed. This time you've got the Fed driving it from this point. Here, you didn't have the Fed. Here, you didn't have the Fed. Okay, one last item I want to show you guys right quick. This low point here and this low point here. Let's draw a trend line right there. Note the direction. Note the slope of that. This low point here and the next low point. Note the slope. The slope is increasing. When the slope is increasing, it's telling you that the market's fixing to spike. So again, overbought, I don't care. In short, she's not overbought. She's actually just strong. Okay, to save time, I'm not going to go over all the long-term charts. I could show you that same exact scenario forming there. What I am going to say is if you want to see that in deeper detail, just go pull up the charts for yourself. Now let's get on to look at each individual particular chart that I'll be talking about next week and different scenarios that I see playing out. Right now we're looking at the Australia market, ASX and AORD here. You can see that we have a nice move to the upside here. We had a stop way over here. Now we've advanced it all the way up to this point here. You'll notice that our first target was the previous high. We have tested that, and it looks like we're moving higher here. I'm not surprised. This would continue to move to the upside. That's fine. All I'm done in all the cases you're going to see today, all I've done is locked in a game, but I'm leaving myself room for the rally to continue to move to the upside. Okay. Looking now at the Dow Jones Industrial Average chart on this 3-month daily chart, you can see that I've advanced the stop. What I'm doing here is I'm right below this particular day, or 1 cent below that. And here's the argument. I could advance the stop to this point here, but it would increase the risk of me being stopped out, and then we just simply move higher. You would move higher, and that would not be some scenario that I would want to happen. Do I think that Monday or something like that, after having 4 consecutive days to the upside, that we will pull back and see a little dip into here? I don't think so, and here's why. It'd be the equivalent of me asking you right now, hey, let's pretend like the Fed never said what he said, and some of your stock at 13,400. Are you going to do it? Of course not. You're going to think I'm stupid, so you're not going to let go of that stock. Therefore, if you're not going to do that, neither is anybody else, and they're not going to actually sell off to this point. You can have scenarios where it does happen, but typically it's not a couple of days after the announcement. You're going to wait. It's going to get a little bit further extended from this point. Right now, the Fed has put in a floor into the market. This is a safe place to have a stop loss limit. As she continues to move higher, then we'll start getting little shakeouts here and there, and we'll start moving higher again. But I won't want to get too close with the stop loss limit. You're just going to ruin something. And again, I've already locked in the gain. Our stop was here. Our entry point was here. So all of this is just gain to me anyway. Looking now at the French CAC 40 index, this one's moving to the upside as well as the rest of the markets. I got basically nowhere else to go but up. This chart, however, I'm not actually a fan of it. I've contemplated actually moving my stop all the way up to here, but I don't want to get stopped out just because I don't like this particular chart. It's not, no major point. That the reason I don't like the chart is it's kind of sloppy, and that bothers me. You have this move here, a little bit of a correction here, and you never really. I would have preferred something like this and a nice candlestick formation, something like that, then an advance higher. We didn't get that. She just kind of went up here, jerked to the downside, jerked back to the upside, consolidated in kind of a funky manner, and then we're starting to break out again, test just the previous resistance, finding support there, bouncing off that, moving higher. I've advanced the stop to this point here, and we'll be looking to advance the stop further because I'm just not a fan of the overall chart pattern. I'll show you a chart in a minute that I prefer better. Looking now at the MIB, the Milan index, you can see we're doing basically the same thing as the French market here. Move to the upside, lower low, that's bothersome. Move up here, pull back, jerk back to the upside, break out of previous resistance, and then kind of sloppy little rollover consolidation period, and then a breakout, which we used for the buy opportunity, and everything was fine with that. But we've not really had a really good chart formation, and I'll show you a better one in a minute. You get an understanding of what I'm looking for. But in this particular case, again, I've just advanced the stop to previous low of the last pullback, and then she started to move higher. That's fine. I'll keep trailing my stop about 2 candlesticks behind. You'll notice again, overbought here and then continues to stay that way. This is what I'm talking about. You're going to be seeing that overbought and just holding that, hugging that situation when you stay above that 70 line. That's going to be pretty normal. So when you keep hearing people talk about everything's overbought, well, get used to it, at least temporarily. Looking now at the German DAX composite, a little bit stronger chart here. We like several different things about this. You've got this wedge formation going on here, nice consolidation before the breakout, nice buy opportunity here. We advanced the stop, locking in gain. We're right here, and we're just going to let this continue to move to the upside. Notice again, overbought, pulls back a little bit, and where are we going? Back to the overbought condition. Gold has been on a tear. It was the first one to break out, and this is the one that we talked about. This is the one that I would have traded as soon as you had this change. You notice you had this high point here, lower high. We told you this pullback was coming. It was going to be a buying opportunity. As soon as you got a shift from those low point, those high points stopped being lower than the previous, and as soon as you got one even a penny higher, you would be a buyer. In this case, it happened intraday. You could have been a buyer there. Just move to the upside. Personally, I would have a tight stop on this right now, or, I mean, if you guys got two different scenarios. Either your stop is here or your stop is here, and in either case, that's fine. I would personally say that's great. Go find something else. This is not something that I want to continue to hold the long term. I know that other people will. They're going to, just keep doing that, and that's fine. But I'm trading here, so my overall reviews of the individual charts, I would personally on this one have a tight stop at least at this point if I hadn't already taken a gain there and just considered it a past opportunity. That's fine. The next pullback that you get here, of course, would be a buying opportunity as well because you're making new highs. So you're always going to have to test those highs anyway. So whenever we do get that pullback that's going to come down the road, I think you're still a couple days away from that. Whenever that does happen, then we will of course be looking for another entry opportunity into that position. Looking now at the Hong Kong Hang Seng Index, this is the only chart that we didn't actually take a buy opportunity on it. We didn't have the candlestick formation. We talked about this when it was going on. It was without the candlestick formation. It's a bad habit to say, oh, I'm just going to buy it because I think everything's going to go up. That's a bad idea. You're trying to call a bottom and do all sorts. I wouldn't do that. I just have setting a simple rule for yourself: only buy if the candlestick formations tell you to do so. Otherwise, just let it pass. In this scenario here, looking at this chart, you can see we have a lot of volatility here. Nice move to the upside, nice move to the downside, nice move to the upside. Fine. Sooner or later, you're going to get a pullback again, and I'll be looking for an entry opportunity at that point. Right now, I'm not. You are, again, overbought in a situation here, and then, again, you just come right back to it. You're going to be hugging this line for a while. Eventually, people are going to say, I want to take some profits. Then you'll get a pullback. Right now, people aren't doing that. Looking now at the BSE, or the India Bombay Stock Exchange, nice move here. You'll notice we have a nice buy signal at this point off of a hammer candlestick formation. That's the one that we chose to trade rather than the Hong Kong Hang Seng Index. This is the one that we like better. And again, you notice that you have this high point here, and then pull back, then you come to that high point. That's where your first target would have been hit. You overextend a little bit, then you pull back down. Now we've done the same thing. Come up to the previous high, hit it, overextend, I'm advancing the stop to lock in some gains. Really tight stop on this particular case. And you'll also notice that you're now trading completely outside the Bollinger Band lines here. That's another reason to advance your stop as tight as you can. Eventually we'll get a pullback here and we'll use it as a buying opportunity. Right now you just want to be disciplined, follow the rules, tight stops to lock in gains, and make sure you have a stop, or otherwise you're going to be losing a lot of money, right? You don't want to be doing that. Looking now at Japan iShares or the EWJ, a big move to the upside here. Again, a nice consolidation period here. Big move here, big move lower, big move here, big move lower, big move here. As long as that's the case, you're going to have to deal with the fact that you're going to have to keep tight stops. Like we just did with the BSE, we're doing the same thing with the EWJ, advancing the stop to 1 cent below today's low, and we'll continue to do that, advancing until we are eventually stopped out. Another couple things to point out: you had a previous resistance point here, blew through that. You've got another one here. Typically, you go through one and you hit the other one and you stumble. This one's got Fed backing, so maybe you're going to blow through that as well. But again, at some point, you're going to get a nice pullback, and that's when I'd be doing my buying again. And it's also going to be the point where I'm going to be stopped out of my initial trade and be looking for that long trade opportunity again. But right now, the main thing I want to be pointing out is if you've got a lot of gains on the table, tighten up your stops. Looking now at the FTSE, the London Financial Times Index, this is probably the prettiest chart for Europe right now. You can see nice move to the upside, nice move lower, nice move higher, nice higher low, higher high, higher low, higher high. This is beautiful. This is a perfect chart to be trading. You've blown right through the previous resistance point. You'll notice no inverted hammer candlestick formations at this point, indicating this is not a resistance point. It's just people got overextended and they said, let's take some profits, and you get this pullback. Look for the same thing to happen. Right now, it's way too early for that. I mean, looking for this to continue to move to the upside. This is the same scenario I was talking about with the Dow Jones Industrial Average. You've got the Fed activity right here, shown on price chart there, and then for somebody to say, hey, why don't you sell it to me for 58.50? No one's going to do that right now. They're going to overextend this guy. So again, overbought, expect it to hold. You will notice we have advanced the stop also on this trade, the FTSE trade, but again, and even though it's only the low of the current candlestick, which I typically don't do that for concern that I'll be stopped out. In this case, I'm not, because this is, again, the Fed candlestick, so nobody's going to come down here and say, I want to sell off over here. No, that's kind of dumb. Looking now at the NASDAQ here in the U.S., again, we told you yesterday you could even be a buyer at this particular point. We also told you could buy all of this little pullback back here, but no one listens to us. Actually, somebody did, I'm sure. And up she goes. Great. Continue to stay with this trade. You'll notice my stop is way down here. I do not want to be shaken out of this anytime soon. Looking now at XOI, how about that? I'm doing the same thing, basically advance the stop, but I'm trailing at 2 candlesticks, and I'll keep it doing that until we are eventually stopped out. Here was the consolidation period. Told you to watch for the breakout of that consolidation period would be the buy opportunity, and there you go. Up she goes. Advance the stop to eliminate risk, of course, and in this case, lock in gain. So that's exactly what we're going to do here. Also, if you guys are new out there and maybe you're seeing something like that and you're saying, hey, I've seen some shooting star candlestick formations today, a lot of that is just people selling, taking some profits ahead of the weekend. But again, I would not attempt to short this in any way, shape, or form. First, your trend is clearly defined as being up. You don't want to be shorting in that kind of scenario unless you're calling a market top, and I wouldn't be doing that when you're like 2 days from the Fed's announcement. So no, you're going to be moving to the upside again. Looking now at the UUP, the US Dollar Bullish Index Fund, you can see clearly defines major slide this week. And I want to point out this low point here below the 30 line, the ultimate oscillator, this guy is indicating what some people would call it's oversold, and in reality it's actually not. It's just very, very weak, and that's the different way it can be read. And in these scenarios we have breakdowns, like we had this low point here, they got broken down. Once that happened, the trade is breaking down, and she's not indicating that you should be looking for a buy opportunity. She's indicating that she's extremely weak, and she's going to continue to stay in that oversold condition. Yeah, she may jump up above it and then jump right back down there. This is not something I would be looking to buy. Even though you do have a hammer candlestick formation here and you can bounce from that point, I would not look at this as being a bottom that's trying to call a bottom. That's really dangerous. I look at this as being an overall downtrend, and in that scenario you want to work with it on the short side, not be looking to catch a bottom. So what I would be doing here is, let's say if it were to rally next week, it's a long bet, but let's assume that it did, then I'd be looking for an opportunity to get short, not an opportunity to go, hey, I'm going to buy this. That would not make a lot of sense. There are times when I will try to call a bottom or call a top, but I typically mark on the chart that I am doing that and I'm going counter trend and things like that. And I do point out that, and when I do that, that this is a high risk trade because you're betting against the current trend, things of that nature. So if you guys looking at that thinking I'm going to buy this, I wouldn't do it. Looking now at the Russell 2000 Small Cap Index, this has been a monster trade for us, a great call. Move to the upside here, hits resistance. I want to draw this out for you guys again so we can do the math together. And you'll notice when we get this nice little cup formation here, we come up here to the previous resistance point, bounce off that again, pull back down here and start to form the handle of the basic cup. We told you at that time, you've got this little line right here. When you close above that, you want to be the buyer, right? Well, that happened here. You had a buy opportunity, and then the next day you got a buy opportunity as well because previous resistance is now acting as support. That's why price had nowhere to go, but whoop, we're going up. And then we start to rally, so we take the stop that was down here, and we start advancing it. Again, I'm 2 days, or 2 candlesticks actually, removed from the high point. That's where my stop's at now. I'll keep doing that. Eventually, I will be stopped out. And the main thing I want to look at right now, this low point, and this actual resistance point here, you measure this distance out, do the math, you take that distance and you add it to the breakout point, and that gives you an idea of how high you're going to go before you get into some point where you have to either you're going to hit resistance or you're going to start to consolidate, or something's going to happen at that point, some point of decision for traders, and we're pretty close to that. So that's again something to keep in mind. You're going to start to see, to get further away from the Fed day, you're going to start to see some sell days and things like that. And it could go sideways, it could do lots of different things, but at that time you may get stopped out if you're too tight in your stop, but we may be looking for another opportunity. Well, not may, we will be looking for another opportunity to go long in this particular average as soon as we get a nice quality pullback. Again, noting the overbought condition doesn't mean anything in this particular scenario. Here you are showing overbought, and what happens? You go sideways, and then you do it again, and you're going to go overbought again, right? You're going to be hugging it. Over here, I would give you different counsel. It would be a completely different argument. Over here, same thing. I would go a completely different way. In fact, I did. And then we started to see this consolidation pattern. I said, hey, this isn't going to sell off. This is going to break out. And what happened? She broke out. Looking now at the SPX, or the S&P 500, basically the same story. Nice uptrend. We've advanced the stop, 2 candlesticks removed from the current price activity. This is your Fed candlestick formation. Do I really think the next day we're going to sell off back down as though the Fed never said anything? No, I don't. I expect us to continue to go higher. If you're looking at this as a shooting star, basically a sell signal, I would not be doing that. Over here, you had a weaker actually, I should say a stronger sell signal. And what kind of sell activity did you get? Consolidation, right? All right, so in this case now, you're looking at an even weaker sell signal, meaning that there's actually, it's hollow. The candlestick formation is hollow, meaning that there's buy pressure still in the mix. Whenever you see those, even in a normal condition, like you did over here, it still calls for more moves to the upside. A weak, but more moves to the upside. And again, I would not be trying to sell this market that's in this. You're basically trying to fight the Fed and the trend, and there's just no reason to do it. Quick look at silver, basically the same as gold. However, I didn't like this particular chart. I told you guys back in that time period when the breakout was going on that I would prefer gold over silver. If you're trading silver, great for you. You basically do the exact same thing I just said with gold. You either have a stop set off of the current low point right here, or you have it set off of this one here. In either event, you know how to trade this. Continue to trade to the upside and continue to advance your stops until you are eventually stopped out. Again, pointing out the same story. Overbought, overbought, consolidates, overbought, and we go there again. We're just going to keep hugging that overbought condition again and again and again. The Toronto Stock Exchange, or the TSX, this one we actually advanced our stop on really tight, and at this point I think it was, and actually we're expecting to get stopped out. We were doing that on purpose. We were just trying to make sure we had some gains locked in early on in the trade, so we didn't have a loss to deal with if the thing went turned bad on us and the Fed announced something that we didn't expect or something of that nature. So in this scenario, we didn't actually get stopped out, however, so because that didn't happen, we just keep advancing the stop. This is your Fed candlestick. She's continuing to move to the upside. Expect that to continue to be that way, and I would continue to trade on the long side here. If you're already in it, yeah, continue to be that way, but in all these charts where I'm showing you, we're advancing the stops. That's just what we're doing. We're just, the only way that we can trade this at this point is to advance the stop. I wouldn't go out there and buy it now. Of course, I don't have to. I already buy it. But the situation that you're looking at is going to have people running out there to chase the stock because they missed the call, or they were too afraid to get up there in front of the Fed, or whatever the reason was, and now they're sitting on the sidelines going, well, she's overbought. She's overbought. That's why you're hearing that conversation that's going on in the market, but everything's overbought. They're not, and sooner or later they're going to get fed up with sitting on the sidelines, and they're going to start jumping in. When they start jumping in, it drives things up that much more, so forth and so on. All right. Last but not least, the volatility index, or the VIX. It runs the inverse of the S&P 500. So if the S&P 500 is in an uptrend, the VIX should be in a downtrend, and that's exactly what we see. We got this low point here. We jump up here to a high point. We pull back down to a lower low. We jump up here to a lower high, and this is expected to continue. So even though you haven't yet broken down below 1330, I would expect it to do so. I would not attempt to buy the VIX and expect to make any money on the upside. I don't think it's going to happen. I would also point out that you can see a lot of times when you look back at the previous low point, you'll notice there was no hammer candlestick formation here. That often indicates that that is not a true bottom. Therefore, the argument that this is going to now reverse here and start to move to the upside doesn't make a lot of sense to me. I think you can actually go lower, and then sooner or later you may actually get a real bounce. But right now, this is in a clearly defined downtrend. You want to look for a bounce to be a short opportunity. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, enjoy your weekend, be safe, and I will see you all on the next video. Probably this weekend I'll make some more tutorial videos and put them on our website for you guys, alright? God bless, take care. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.